Welcome everyone to Total Merchant Services Overview of Interchange 101. So we're going to be talking about a lot of the different details of Interchange today. As you've all noticed over the years, your wallets have changed drastically. Our parents used to have one type of credit card, no bells and whistles on it. They'd take us out to dinner. There'd be a knuckle buster receipt handed to them, and that merchant would take the back end of that knuckle buster, run off to the bank, deposit like they would with checks. But then over the years, you've seen the movement of money become much more automated. So, and then of course, what's in your wallet today has changed drastically too. We have credit cards, we have debit cards, ATM check cards. Some are plain wrapped, some have air miles, thank you points, cash back. So over the years, Interchange has really grown to almost be a science of sorts. So as we go through our session today, I don't want you to think that you have to understand all 300 or so levels of Interchange. Just try to understand what sort of cards or card types would fit into any one of the tiered type levels if you do tiered pricing. So let's go ahead and get into our session today. So what are the differences between credit cards and debit cards? Well, credit cards are very common. It's really a line of credit with the issuer. So our banks give us those credit cards, and they're going to trust that as we charge throughout the month, we go ahead and make that payment at the end of the month and balance that out. Each transaction is processed offline or basically batched out at the end of the day. Let's go ahead and take a look at credit card or debit cards. Debit cards are a little bit different. These are more like they're reaching into your pocketbook and grabbing the money right away. So debit cards can be processed online or offline. So let's say you went out to lunch today, and then you jumped on your phone or your computer right after lunch and you saw, wow, that had already been debited from my account because you used your debit card. Well, that would be an online transaction, so they actually grab that money immediately. Now, if you don't see that lunch, taken off your debit card till tomorrow morning, that was run offline. So that was run and batched out like a regular signature card, unlike a credit card. Now, debit card interchange is going to be lower than credit because, once again, there's no line of credit being taken out on that card. It's actually just being taken from your checking or savings account or money market account. And both debit and credit cards may have rewards attached to them. Could be air miles, thank you points, or cash back. So now let's go ahead and get into who are the players that take place in each and every transaction. Well, you have your consumer, you have your processing equipment, or that's provided by the acquirer, and then you have your bank that's going to help move the money and deposit the monies to the appropriate parties. Who are the issuers, or who are the parties in a transaction? Well, you have your issuers. They're the ones that are going to be the ones issuing cards to the consumers. They assume that consumer's credit risk. So they're saying, hey, Andy, I'm going to give you the credit, but I'm sure planning on you paying this balance off in time, and in the meantime, I'm going to go ahead and charge you interest. They're going to generate reports. They're going to provide customer service, and they're going to send monthly statements showing me the activity that has taken place that month. The associations, Visa, MasterCard, Discover, Amex, those are what we refer to as associations. So they're going to provide the systems, the operations, some of the networks. They provide the risk management. And based on what we're going to be talking about today, they are the ones that also determine interchange. They provide advertising, promotions, and they set standards and rules, not only for consumers on what they can and can't do and how to utilize their credit card, but issuers. Issuing banks have certain rules, regulations, and things they need to abide by. And then, of course, banks, acquirers, everybody who is involved have to follow those rules to protect not only the cardholder data, but also all the monies that are being moved. We also have the acquirers. This is Total Merchant Services in this equation. We sign up the merchants through your assistants out in the field. We're going to underwrite that merchant's risk. We're going to provide authorization, capture, and settlement. And then we're going to go ahead and provide the merchant monthly reports showing all the activity that has taken place. And then if the merchant has any issues, we're going to handle any customer service, Tier 2 or Tech 2 support. So what does an authorization or transaction look like? Well, we see the cardholder, she wants to go shopping at her favorite store, and that store is working with Total Merchant Services, so they have some of our equipment in-house. So we're going to grab that transaction. We're going to pass it on to the association that that card is branded by, and they're going to go back into the issuing bank who gave that consumer that card and say, hey, Wells Fargo, does this woman have the $100 available on her card to go ahead and process this transaction? They come back with a definite yes or a no. They're going to pass that yes or no back through the association, back through us, and back to the merchant. And we're going to go ahead and approve or decline that transaction. And all these steps take place with just in a matter of about 2 to 3 seconds. Now, when the settlement takes place, it goes through all those hands, but at the end of the day, we're going to go ahead and bring the Federal Reserve in, because they're going to be the ones that are going to go ahead and divvy up and pay everybody the monies that are owed. So you see, they're going to jump in there, and ACHs are going to be made to pay everybody off. So let's talk about the history of Interchange. Interchange was initially designed to reduce risk from issuers for bad debt. So they could do that. You know, obviously they charge our parents, and when cards were first established, a percentage of interest to that cardholder. But at the time, that might not have overdone or taken care of all the fraud that was committed. So Interchange came into play and said, well, let's have the merchants carry some of that risk too through the interchange fees. Well, then all of a sudden you started to see different rewards cards pop up that would influence or encourage consumers to use those cards. So some of you may think back and remember the Diners Club. They give you rewards for going out and eating, and you could store up those points and get an additional meals. Then Discover came to the table with their cashback program. And then Amex came to the table and said, hey, we're going to go ahead and give you a credit card, but you have to pay it off every month, and we're going to charge you an annual fee. So those of you who had one of the white and green Amex cards from way back, you probably remember having to pay off the balance every month, and you paid a pretty decent annual fee, but yet you got some nice air miles and rewards points for that. Well, then came the advent of some of the higher-ended cards. The Visa MasterCard came out with signature cards. So they said, hey, we want to go out after the people who have a lot of money, who have great FICO scores, and they generally pay off their balances each month. So we're going to give them credit cards, and we're actually going to give them a higher loan ratio. So they might have a $30, $50, $70, $100,000 line of credit tied to that credit card. And then they said, well, let's make it available to the masses, and that's where we're at today. Rewards cards are out for just about everybody, and these rewards are now tied to debit and credit cards. So most of us will probably, if we opened up our wallets, we probably have cards that give us thank you points, cash back and air miles, and we thrive on it. We love them because we can take our families on vacation. But the thing is the banks that are giving us those nice rewards attached to our cards aren't really paying for it. It's the merchants where we utilize those cards, thus the interchange and the different costs of interchange. So let's talk about, on a scale, what are the cheapest cards to process. So a merchant, obviously, they're looking to keep their costs down. And as we go through the rest of this session today, I want you guys to think about the knowledge you're going to gain, not only in today's session, but in sessions moving forward. We really want to differentiate ourselves from everybody else, and knowledge is really going to be that piece that differentiates us. We could sit home, we could read books, keep that knowledge to ourselves, and we could become a brilliant person. But if we take this information we're gathering today, interchange, and we turn our presentation and our conversations with merchants into a valuable conversation, and we help them understand interchange a little bit better, guess what? Now you become a trusted advisor. You become a consultant for these folks, and that is really going to add value to your relationship. Then when other folks come behind you and try to steal that business away, they're not going to be interested in leaving, because you've become that trusted person that they know is going to provide them with the answers they're looking for. So the lowest rate of interchange is going to be your just plain wrap ATM cards. Then you have your PIN debit cards. Then, of course, you have your check cards. And then we have our plain wrap credit cards. I just call it a plain wrap. It's a consumer card, no perks attached. Generally, consumers that get these cards, they get them because they say, hey, I don't travel much. I want the lowest interest rate I can get on the front end of my card. So when I use it, I don't want to pay 19, 20, 25%. I want to pay 8, 9, 10%. So they might go for a card that doesn't have any rewards attached to it. Then, of course, we have rewards cards. Rewards 1 are when they're swiped. Rewards 2, you're going to find in this pack today that it has a higher reward, and that's because it's keyed versus swiped. Then, of course, you have your signature preferred cards. You have your commercial cards, and you have your P cards. Those are also called procurement cards. So you might say, well, why, Andy, is the interest or the interchange so high on commercial cards, procurement cards, and signature cards? Because these are all, these are handed to corporations who typically don't abuse credit card. They're not going to really go bust on the issuing bank, and that's very true. So the commercial cards, P cards, and the signature preferred, for those folks with those high FICO scores, really manage their money well, have high balances, those 3 card types typically get paid off every single month. So they don't carry a balance. So the issuing banks don't really make a lot of interest or can't charge a lot of interest on those cards. So their only way to make up for some of that money that they're not making by the interest gathered on the front end is charge a higher interchange on the back end to the merchants. So the merchants who accept those P cards, commercial cards, are actually going to pay a little bit higher interchange, even though there's going to be less risk tied to that transaction due to it being provided by a corporation. So let's talk about interchange, who the roles are, who gets what. So we have the merchant. The merchant pays interchange. The acquirer, that's us. We collect that interchange, and we're going to send that to the issuing bank or the issuing financial institution that provided the card to the consumer that's using it at that establishment. The associations determine interchange. And what determines interchange? Well, the type of card being used, the type of business, maybe their SIC code, that stands for Standard Industrialized Code. So if it's a higher risk type scenario or a higher risk type of business, that might carry a higher interchange rate. And then we see there the issuer, which is the financial institution, they receive interchange. So let's take a rate, and what we're going to do is we're going to kind of peel back this onion. So let's just say this is a mid-qualified rate we're offering on a tiered level. So the rate we're going to offer our merchant is 2.39% and 20 cents a transaction. So let's say that is a $100 transaction. So $100, 2.39% of that and 20 cents equates to $2.59. So what makes up that $2.59 and who gets what? Well, the funny thing is when we're out talking to merchants, sometimes they don't like us because they think we're the ones that are taking all the money from them. Well, really the bottom line is about 70 to 80% of each transaction that the merchants pay for goes to interchange. So all of us out there selling to merchants, we're actually arm wrestling our competition for that last 15 to 25%. So when we explain that to the merchants, sometimes that'll put them a little bit more at ease, because when you say, hey, Mr. and Mrs. Merchant, out of every $100 you're processing, I'm really only getting 15 or 20 cents of that. And the issuing banks and associations are actually the ones getting the couple $2 to $3. So once again, let's continue to peel the onion back on that transaction. So we have $2.59. This was a swiped rewards card. So interchange on that rate is 1.65 and a dime. So that is $1.75 based on that $100 value of that transaction. So we're going to deduct that $1.75 from the $2.59. And once again, interchange that 1.75, which is the 1.65 and a dime for interchange, goes to the issuing bank. So Wells Fargo is going to get that in this scenario. And what are they going to do with that money? Well, that helps them make the cards, ship the cards. It helps them watch out for card fraud, protect it. They offer rewards cards, programs, air miles, cash back, and then they send monthly statements to the consumers for that as well. What are some of the other fees today? Now, in the past, go back about 10 years ago, Visa and MasterCard were both nonprofit companies. So all they needed to do was worry about making enough money to get them through each individual year and not have a whole lot left over at the end of the year. But then they both became public companies, and now they answer to the stockholders. So the stockholders are very interested in seeing their money grow. So with that being said, over the last few years, there have been a lot more dues, assessments, and fees that have been charged to merchants. Obviously, the merchants aren't too excited about it, but this is what helps pay for that, keep them productive, helps them continue to expand different ways of moving money for us, and once again, give value to everyone involved in that transaction. So what we're going to do now is we're going to go through some of the additional fees you might see on statements as you do an analysis. Dues and assessments. 13 basis points for Visa, MasterCard, and Discover. 15 basis points for MX. What does that cover? Once again, they're going to utilize that money to run their business, create the association rules, regulations, networks, things like that. And then they also charge a fee. Visa charges what's called an APF fee. That stands for Acquire Processing Fee. Basically, it's 2 cents. NABU, Network Access Brand Usage Fee. That's for MasterCard. That too is about 2 cents. Discover calls it an access fee. So when you think about it, the 13 basis points and the additional 2 cents, that's above interchange, but it's part of the additional fees that are going to be charged to the merchant. And once again, it helps them continue to be profitable, to lessen the risk and the fraud that might be committed, and that helps them continue on. So really, these are branding fees. So if you pull out a Visa card, you're going to get that dues assessments and that couple penny APF fee. If you pull out a MasterCard, they're going to get that 13 basis points of assessments and that 2 cents for that fee. And then cross-border fees. So if you travel out of the country and you use your card in Italy, Spain, Europe, something like that, you might be charged an additional fee, cross-border fee, from your issuer for that card. Well, the merchants where you use those cards will also pay between 40 and 80 basis points in cross-border fees. So if someone comes to the United States from Japan on business, they use their cards at a local area near airports and restaurants, things like that. They'll happily take those cards. However, when everything settles through the end of the month and they realize that the United States networks had to touch and shake hands with the Japanese networks to continue to move that money through their banking system, that's what those cross-border fees and additional basis points help pay for. Then we have the FANF, Fixed Acquired Network Fee. This is an annual fee paid by merchants, and it could be as little as $5. It could be, as high as a few $100 or more. It's really tied into the volume that the merchants are processing in a given month. So the communication fee. So here on our statements, we call them a communication fee. So who gets that? Well, that's going to be, we're going to collect that, and that's going to help pay for some of the movement of the money. So there's networks. Think about highways and freeways to get from one place to the other. Well, our credit cards and our debit cards do the same thing. If you were to actually pull your credit cards out of your wallet right now and your debit cards and you flipped them over and looked on the back side, you'd probably see 2, 3, sometimes even 4 different names on it of different networks that card will most likely be processed on. So if you're in New York, there might be certain debit networks that are more popular in that end of the United States, and then here on the West Coast, there might be some networks that might be used more often than not on this coast. So you'll see those card types or network types in the back of your card. So let's fully scale this transaction down. I showed you $2.59. So our mid-qual rate we offered our merchant was 2.39%. We take away the raw interchange, which is 1.65 and a dime for that rewards card. So that leaves us with 74 basis points and a dime. but then there's association dues and assessments, so 13 basis points would be taken out for that. NABU fees are a couple pennies, and then that leaves a net of 61 basis points and 8 cents. That's really where the profit comes into play that we're going to share with you. So if you did a cost plus scenario, look down below. That's really what that would look like. So what we're going to do is we're going to take all the interchange, we're going to take all the association dues and assessments, fees, and then we're just going to do a plain wrap charge above that. So in this scenario, we see, let's just say for this scenario, we charge 50 basis points and a dime. So what we would do is we'd say, okay, Mr. and Mrs. Merchant, we're charging you 50 basis points and a dime. So the interchange rate for that same swiped rewards card is $1.65 and a dime. And then, of course, the associations want their assessments and couple penny branding fee. So they're going to take 13 basis points and then that 2 pennies, and then we'll get that 50 basis points and a dime. Now, if you do cost plus, it's always going to be 50 basis points and a dime. So sometimes, let's move back up to the top scenario. Sometimes there are cards, we charge 2.39 and a dime. Well, some of the rewards cards might come through at 1.8%. So obviously that would take another 15 basis points for that. But that tier 2 or that mid-qualified bucket, that 2.39% is going to encompass a few different types of cards, but you're always going to be in the profit, and you might make a little bit more profit on a lower rewards card than the other. Whereas if you do cost plus, if it's a debit card, we're going to pay that debit interchange rate, plus you're always going to make 50 basis points. If it's a corporate card and it's 2.2%, you're always going to make 50 basis points on that. So what does interchange rate do for a merchant, or what is determined? Well, there's really 4 things that need to be considered to determine what the interchange rate could be for a merchant. First off, how is the card processed? Best scenario is always a card-present transaction. You see in that first picture, the young lady is taking the card over the counter. She can ask for an ID. She can swipe that card where we can get a full card read on it, or an EMV dip nowadays, right? So that's going to be your best, safest, and most secure type of transaction, and it's going to offer the best type of interchange rates. What type of business is that merchant in? Based on their SIC code or MCC code, that could have an effect on what type of interchange they pay. What type of card is that customer using? Are they using a debit card, a rewards card, a corporate card? That could affect the interchange rate as well. And then, does the merchant process the card as expected? So what does that mean by as expected? Well, in that retail setting, we're going to basically set her up for 90% card swipe, 10% key, because occasionally you're going to get a card that just doesn't work. But what if she starts to key in all of her cards? Well, obviously she's going to get a lot of downgrades, because she's going to get the downgrade from keying in those transactions when she was set up as a retail swipe scenario. Next to that, you see a website address. So sometimes people are going to be processing online. Well, interchange rates are going to be higher for e-commerce or a key transaction. Why? Because we can't always look over the counter. We can't grab that individual's driver's license and match up the name with the name on the credit card. So in those types of scenarios where you're taking an order over the phone, or you're having the consumer type it in themselves through a shopping cart online through an e-commerce website, we can't always be sure that that is the actual card holder. So there's some trust involved there, but there's also more opportunity for fraud. So the rates are going to be a little bit higher. Let's go on now. So what are some of the things we can ask our merchants when we're interviewing them, when we're going through our initial conversations with them? Once again, you're going to hear me reiterate the fact that knowledge is important, but putting that knowledge to use is much more important. So we really want to become that trusted advisor to the merchant. So if we just go in and we speculate or we assume, that could get us into trouble. So the best thing to do is ask a lot of open-ended questions and try to better understand what they're doing. I've won a lot of business, not by lowering my rates, but by better understanding how they're doing their business. Through their answers, I found out that there were areas of improvement, things that they were doing that they shouldn't have done because they actually could have put more money in their pocket. So by me educating them, consulting with them, and showing them how to do it, I won a big fan. I didn't necessarily have to, once again, save them money. I helped show them where they could save money just by running a transaction fine without me actually even have to lower their rates. So, questions like, Mr. and Mrs. Merchant, please explain to me how you process your non-cash transactions. Who enters the transactions for you? Do you and your employees always swipe cards? If not, when? Do you ever have to force or key them in? When? How often does that happen? And sometimes you're going to be able to see those things on their statements. And if you start seeing a lot of IRFs or standards on there, you know that something's wrong. And as we progress through the session today, you're going to understand some of the things to look for. Other questions you can ask. Does your terminal, does your POS software, does the software on your laptop ask you to key in a zip code? That's AVS. That stands for AVS. Another one is CVV, Card Value Verification. So when you go to the gas station and you pop in your card to pump gas, what's the first thing it asks for? It asks for your 5-digit zip code to match the billing on that card. That is a fraud protective feature for that gas station, because you could take my card and go get gas across the country if it didn't ask for the billing zip code, right? So it's going to protect that card holder because they have to match the 5-digit zip code that matches the billing zip for that credit card. Now, if they bypass that, that could cause problems, as I'm going to show you here in just a few minutes. Also, there can be different levels in the way the merchants process. Are they ever asked to enter sales tax or a customer code? So you guys have probably seen that. You go to the grocery store, everything is line itemed out, right? And then sometimes you go to a small little store and they just run the total for you. So there's a difference in the way some of these merchants are set up. And if they are asked to enter sales tax or customer code, they need to do that if that's the way they have that merchant account set up. Is there ever a time when you can't get an authorization or settlement? If so, Mr. and Mrs. Merchant, tell me what that looks like, how often it happens. And then how's this question? How often do you batch your machines? I walked into a merchant one time and I asked him that. I was looking, and everything he had on his statement was standard. And he was paying like 4.5%, 5.5%. And I said, well, is your terminal batching out for you? No, I don't get that many transactions through the week, so I only just batch every Friday. And I thought, oh my goodness, you weren't trained right from the start. Here's what happens by you not doing that. And he was paying about 2% more than he needed to, just because he was never taught properly that if you run a transaction, you need to batch it out on that very same day, or you can have some downgrades. And then, of course, are there any IRFs or standard descriptors that you see on that merchant statement? I'm going to go into what might indicate an IRF or a standard transaction here in a few. So let's describe how these transactions can take place. Now, if you set up everybody in one standard, if you set up everybody retail across the board, you might be charging some people too much money, right? So let's take a look at some of the different interchange levels. So you have retail. Is the card present, or is it keyed? If it gets keyed, that could turn into a card not present transaction, and interchange is going to be a little bit higher. Is it a mail order telephone company that you're processing for? Well, obviously when you're setting them up, you would set them up as a Moto account and not a retail account, because they're going to be keying in about 95 to 100% of those transactions. The restaurant, are you doing pay at the table? In fast food, same thing. Are you paying at the counter? Are you paying at the table? Is there tip lines? Things like that. Supermarket has a different interchange level. Small ticket. Some people might say, well, what's small ticket? Well, that's where your tickets are very, very small, so the interchange is going to be lower. The transaction fee for that rewards card was 1.65 and a dime. So the small ticket might look more like 1.35 and 4 cents a transaction because they're low average ticket. So when you think about tickets less than about 20 bucks on average, the transaction fee could play a much higher role in the merchant's cost, as well as it could play a much higher role in your profitability. So when you're pricing a merchant that has very low average tickets, that transaction fee is more often than not going to be where your real profit, or the bulk of your profit, is going to come into play. And then in recent years, Visa and MasterCard have created new interchange levels that's a little bit lower than retail and restaurant type transactions, because it's for nonprofits, and most of the time when people make a donation to a cause they believe in, they're not going to charge that back. So there's very low risk, and so they can provide a better interchange rate. In recent years also, utilities have been able to accept credit cards as a method of payment. So they too will have a lower rate on interchange. E-commerce websites, all the transactions on those are going to be keyed, so that would be a higher rate than your typical retail card established swipe rate. So I could be a retail guy right in the corner here, but I could also have a website. So my retail rate would be 1.54% for a plain wrap card, 1.65 for a rewards card, 80 basis points for a debit card. But then when someone buys from my website, now it's going to jump to maybe 1.8% to 2%. And that's because the card is not present for those transactions. Much more opportunity for risk. So the associations that determine interchange would have a higher interchange rate for that. Now what I'm going to recommend you all do for homework is go to the websites and understand interchange to a greater degree. You can go to Visa, you can go to MasterCard, you can go to Amex and discover. Or you can just go straight to Google and type in Visa Interchange, and then you're going to come up with this web address, and it's going to give you the PDF, and it's going to show a breakdown on plain wrap debit for the different channels. You're going to see credit for the different channels. You're going to see credit with rewards. You're going to see the corporate cards. You're going to see procurement cards. You're going to see all of those different line items on Visa, MasterCard, and Discover as well. Now, I want to also kind of tiptoe into a little bit of the interchange differences between Amex. So as you know, recently last year, Amex provided the Opt Blue program. And so now we can all make a little bit of money on processing Amex cards. In the past, we would only make a little transaction fee by passing that transaction off to Amex. Well, guess what? Now we can make money on the processing as well as the communication or transaction fee. Now with Visa, MasterCard, Discover, they have an interchange rate based on the card type. Now with Amex, they have about 27 different levels of interchange, but they only have about 9 different channels they work with. And what Amex has done, they basically have 3 different pricing interchange levels for each business type. So for retail, under $75, their interchange rate would be one rate. And then if the average transaction jumps from $750 to like $150, they're going to pay a little bit higher of an interchange rate. And then if that average ticket or that transaction jumps above that $150, they're going to actually pay a third rate. So once again, for Visa, MasterCard, Discover, it doesn't matter what the average ticket looks like. It's the card type that determines the interchange. But with Amex, the actual average ticket value is going to affect what that interchange rate might look like. And once again, you can go to Amex's website. I've also created a deck on Amex, so if you'd like to see that, I'm sure that'll be one of the training programs we put you through in the future. But the deck is on the Group Partner Portal right now under Amex if you want to view that yourself. But once again, I recommend you gather the knowledge. And don't think that you have to know every interchange level. If you are a tiered person, if that's how you like to price your merchants in a 3 or 4 tier model, just understand the bulk of where the cards are going to fall into. Like, hey, a plain wrap credit card and the debit cards, they're going to fall into the qualified rate. The rewards cards and a key transaction are basically going to fall into that mid-qual rate. Hey, and my non-qual rates, those are going to be on my procurement cards, my corporate cards, my world travel and entertainment cards. That's what I want you to take away from the session today, because we could literally spend the rest of our lives trying to master the 300-400 different levels of interchange, and we don't need to go that far. Just understand that when you're meeting with merchants, talking to them, coaching them, and looking at their statements, you can kind of decipher if the cards are dropping into the right buckets and they're paying an appropriate fee. So what are some of the different rates? So here we have some examples. You have CPS, retail, you have keyed, you have rewards 1, 2, you have Earth, standard, you have retail debit, and you have retail small ticket. So if we were doing a classroom setting, I'd give you all about 10 minutes. I'd have you jump online, I'd have you jump on Visa, and I'd have you look at Interchange, and I'd have you do some research, do some homework. And I recommend you do that. Maybe take a snapshot of this screen right now and do it out. But for the time we have to deal with today, I'm going to go ahead and pre-fill these for you, so you can kind of see from the top down the best rates, the best interchange rates, and then as you go down the row, you're going to see what the merchant would pay moving up the food chain, so to speak. So CPS retail debit exempt and regulated. So I think people have often asked, well, what's the difference between regulated and unregulated debit? Well, it's really the size of the financial institution that provided that card. So if they have under 10 billion of assets, it's unregulated. Over 10 billion, it's regulated. So that's why you see the difference in debit fees. Now, a few years ago, you probably heard of the Durbin Act. Well, there was a congressman who said, things just aren't right. Merchants are paying as much or sometimes more in some cases to process debit cards, and that's just not right, because we're reaching right into their pocketbooks and taking the money right away. So that's what really came to the Durbin Act and creating the differentiators between the regulated and unregulated or exempt. Then CPS retail, that would be a plain wrap credit card, no bells and whistles. Then you have, it went from, so let's just say if we couldn't swipe it and we had to key it in because the mag stripe was bad on the back of that card, you see it jumps almost 30 basis points because once again we keyed it versus swiping it, more risk involved, so there's a higher interchange rate. Now I mentioned earlier about a small ticket. The actual interchange rate is 1.55 and 4 cents a transaction. So once again, it's going to keep the pricing competitive for that burger joint where their average tickets are only $7, $8, $9. CPS rewards, so that's your first level of rewards. So we go from plain wrap card of 1.54 to 1.65 if they swipe that card. But look what happens if they key that rewards card versus swiping it. It goes to 1.95% versus 1.65. So once again, when you're looking at your merchant statements, if they have a terminal right there on hand and you're seeing a lot of keyed data or a lot of rewards too, there might be something wrong with that terminal and might not be reading the cards properly. And once again, this is where you can put on your consultant, trusted advisor hat and help them out. And I mentioned earlier that there were new interchange rates. I guess they're not so new anymore. They've been around a few years now. But for nonprofits. So if you want to specialize in nonprofits, sometimes in the past, nonprofits were set up as a retail type scenario. So they were paying rates like 1.54 and a dime. And now all of a sudden you come into town and say, guess what? There's actually a better interchange rate for your type of business. If you provide me with your 501c3 certificate proving you're a nonprofit entity, I can actually give you lower rates. So you see there's almost 20 basis points right there that could be used towards more profitability towards your pocketbook and more savings towards that nonprofit or charity. IRF, that stands for Electronic Interchange Reimbursement Fee. Well, nobody's getting reimbursed on the merchant side. It's actually costing them much more money. So we're going to show you here in a minute what might cause the IRF. So if they bypass the AVS, that address verification. If they don't batch out in a timely manner, that could cause it to drop from 1.54% all the way down to 2-3%. Well, what if we run up against one of those merchants that only batches out once a week, and it could drop down even further to that standard rate? So you see, I call these the coulda, woulda, shouldas when I speak to merchants. Hey, you could have gotten a rate of 1.54%. You should have swiped every card and batched out in a timely fashion, and if you did, you would have gotten a much greater savings. So we're going to be talking in a little bit more details about that. Now let's talk about educating our merchants. Some things they can't avoid. They can't avoid the type of card that's handed across the counter. You know, we've probably all walked into an establishment and handed out our Amex card, and they say, well, I don't take Amex here. Do you have something else? And we got to reach further back in our wallet, and we pull out a Visa or MasterCard or Discover. But if we didn't, we likely couldn't run that transaction, right? So we can't say, hey, put that card away. I want a debit card because I'm a merchant and I got to watch my pennies, nickels, dimes. I would actually be chasing off the consumers if I was so rude. So merchants can't really say, hey, put that back in your wallet, give me a cheaper card. That wouldn't last very long. We can't control the commercial cards either. We also can't control the unreadable mag stripe. So if you're a merchant and a card comes across the counter and you try to swipe it and you just can't get a good card read, you might, recommend to the consumer, hey, something that looks like your mag stripe has gone bad. I recommend you call the issuing bank or the financial institution that gave you that card and ask them to send you a new one because the mag stripe just isn't working any better. So they'll still have to key that in. They'll have to pay a little bit higher rate, about those 30 basis points as you saw in the interchange tables, but they'll still be able to process that transaction. But this is where you become that trusted advisor and consultant. If you see your merchant is keying transactions at a point of sale or a terminal, that could be all the difference in the world. I walked into a dentist office one time, and I was ready to meet the office manager to actually talk to them about credit card processing. And I saw one of the ladies at the front counter actually keying in. She actually was holding the card in her hand, and she was keying it into the terminal. And so I asked her, I said, how come you're keying that credit card transaction into that terminal? She goes, oh, because that's the way I was taught from the person before me. Oh, okay. So during my presentation, I explained to the office manager that, hey, they're spending about 30 to 40 cents more per dollar or per $100 they're processing due to that. So they really needed to swipe versus keying. So I became a hero to them. I kept the profit in there strong, and I just matched the current provider's rates. But just with the new training, I was able to save them money, put a nice chunk of money in my wallet. So once again, by asking those questions, looking at those statements, you can see if there's a lot of key entry transactions when they actually have a card-present terminal on their countertop. What are some of the other avoidable interchange downgrades or adjustments that we can save heartburn for our merchants? Well, if they bypass the address verification. So if you ask them, hey, does the terminal ever ask you to type in the 5-digit zip code? And they say, yeah. And you say, well, what do? Do you ask for it? No, we just hit enter and bypass it. Well, it might still allow that transaction to take place, but it's going to downgrade that transaction, and they're going to pay a lot more money. So you always want to tell the merchant, hey, when that happens, when it provides that cue for you to ask for that 5-digit zip code, you want to ask the merchant, hey, can I get the billing zip code that's tied to this credit card? And that'll process for you and keep the rates at a much greater level. And then if you bypass any of the validation code or trans ID numbers, these are some of the larger types of transactions that might be set up for different business models. Most of us on the phone today are doing straightforward retail or restaurant, so you're not going to see this happen too often. But in some scenarios, you might run into that. Or another avoidable interchange adjustment or downgrade is late presentment. they forgot to batch out or they didn't batch out within a couple days or even longer, it will drop down further than that. So, once again, here we go. Unavoidable interchange adjustments. So they're gonna get a little bit higher, and based on the card type. And once again, these are unavoidable. So if someone hands you a debit card as a merchant, you're going to get the best interchange rates available. They give you a plain wrap credit card, you're going to be towards the lower tier. Rewards cards towards the mid tier, and the commercial cards are going to be a little bit more expensive. But once again, as a merchant, those are unavoidable. You can't determine what that consumer is going to pull out of their wallet. So let us take another a look at interchange at the best rate available. So once again, the CPS retail, this is Visa. 1.54 and a dime is for that plain wrap card. So in order to get the best rate, what does that merchant need to be sure of? Well, that the card's present and they swipe the transaction. And in order to swipe that transaction, it's got to get a full magnetic stripe data read, and it needs to settle within 2 days. Now, some people say, well, why 2 days? Well, it could be that sometimes they're open past midnight and they can't batch out till after midnight. So that's why that extra day is provided. And then all the appropriate data, transaction ID, validation code, all the reference numbers, things like that must show up. So when you typically walk out of a restaurant or a retail establishment and you look down at the bottom, you're going to see the different authorization codes and all that kind of data built right into the receipt that you walk out with or the invoice. That's that data. So that's the four things that your merchant wants to ensure to get the best interchange rate available. Now let's talk about the coulda, woulda, shoulda. So once again, I'm a merchant and I have a retail establishment. I have my credit card right there on the counter. So boom, I swipe that first card and I get 1.54 and a dime for interchange. Now once again, you as sales professionals, you're going to mark that up. So if you want 20 basis points of profit, you would charge that merchant 1.74% for that qualified rate. Now, what if the next person that comes in, I can't swipe the card, but I have to key it? Well, it now is going to drop down to 1.8% because I keyed that versus swiping it. So as a merchant, I'm going to pay that roughly 26 basis points more. Now, what could take that 1.54% and actually make me have to pay 2.3%? Well, if I bypass the AVS, if I didn't type in that zip code, or it doesn't match, that could also cause it to drop. Or if they don't settle by the third day, that would cause a IRF transaction to take place as well. Or if I was only able to grab part of the partial track data, that could also drop it. Then you see what could take that 1.54% swiped transaction all the way down to almost twice that amount, 2.7% and a dime on the interchange tables. That would be if they didn't settle before 3 days. So if you see, if they settle at the 4th day on to the 29th day, they're actually going to pay 2.7% for every transaction within that batch. So once again, you could become a trusted advisor. You can win a lot of business just by training, teaching, using the knowledge you're learning today to coach your merchants. So, once again, what are some of the key interchange requirements? So this is some of the requirements for card not present transactions. So this is going to be more like your e-commerce type scenarios, or if you take a Moto transaction. They have to be authorized. They have to be set up with a card not present or e-commerce indicator, and that could be through their SIC MCC code or the way you set it up on the application. Because when you fill out the two-page Easy app, it asks you what type of business is this. Is it retail? Is it restaurant? Is it internet? Or is it Moto? So those are the things you want to make sure you provide on that application to make sure they're set up properly right out the gate. And then you got to authorize it. You got to collect the AVS. So oftentimes when we buy products online, it'll say what's the billing zip code for this for this shipment, and what's the shipping address and zip code for this. And so sometimes it'll say, is it same as the billing? You click yes, and it pre-fills the address. That's what that all looks like when you're buying online. Sometimes it's going to ask for the 3-digit CVV, or that card verification value that is stored on the back of our card. That's another safety feature, because what does that mean? That means you have to have the card in your hand to be able to flip it over and see those 3 digits on the back. So between AVS and CVV, those are 2 additional fraud features that have come into play over the years to help provide a better security for the merchants and to lessen the fraud. And now, of course, we have EMV, which is going to lessen fraud even further moving down the road. So Interchange Management, once again, become a consultant and a trusted advisor for your folks. Analyze their statements. Take a look for things that might be red flags, so to speak, that might give you an opportunity of, this just doesn't seem right. This is a retail establishment, and yet they have a few $1,000s that's coming through at IRF or Standard. Or I see a whole lot of key transactions, so what is going on here? So by finding that out, you're going to be able to assist them. You want to evaluate the interchange qualifications. You want to ask them about, hey, does it ever ask or prompt you to type in the zip code? Are you doing it? Are your employees doing it? Understand the adjustments. So as I showed you today, from a swipe to king, it could actually cost the merchant about 30 basis points more just for that small. Sometimes it's an error, sometimes it's unavoidable. It really depends on the merchant and the cards that are being accepted. Understand what actions you can encourage them to take in order to minimize their interchange expenses. Once again, become that trusted advisor and prove yourself to be an asset to their business. So let's see if we can remember, what is interchange? I'm going to give you a second to think about that through your head. What is it? And then what factors impact it? What's an adjustment or a downgrade? And what are 3 controllable practices that can incur an adjustment or a downgrade? So let's start out with that top one. What is interchange? Interchange is a fee. And do you remember who creates or determines what interchange is? That's the associations, the Visa, MasterCard, Discover, Amex. And what do they use to determine what interchange will become? Well, what kind of rate, what kind of card is going to be used, what kind of merchant, what sort of risks are tied into possibly that merchant, how is that card accepted? Is it going to be a key transaction over the internet, through a phone line, or is it going to be keyed? So what's an adjustment or a downgrade? Well, a downgrade or an adjustment might be made if they bypass something. So let's just say they keyed it in versus swiping. That could cause an adjustment. If they're asked to provide the 5-digit zip code, that AVS, address verification service, that's tied to the billing zip code, and they bypass it, that would cause a downgrade or an adjustment. What else? If they don't batch out in a timely fashion. So what are the 3 controllable practices? Once again, we just kind of talked about some of those things. Making sure you're swiping at every opportune time. Making sure you're batching out at the most opportune time. So you want to, if you're a restaurant and you got to tip out and run everything to 2 or 3 o'clock in the morning, that's fine. Just make sure you batch out at the end of that and don't wait 2, 3, 4, 5 days to do so, because that could cause a downgrade. All right, so that is it for today. I heard a lot of beeps and clicks and stuff, so let's go into our questioning.